What's up, guys? Welcome back to another video. In this video, we're going to talk about how I missed out on $20,000 to $30,000 in profit on a Tesla day trade. I should have hit this, but I didn't because I premeditated, already had an idea of what the market was going to look like, and it ended up doing something differently, and I had already canceled out my plays before I even gave it a chance. This was just me not reacting to the market, but premeditating what the market was going to do. And it didn't work out, right? I always say it. I say it in all my videos. Take what the market gives you, but I decided to predict what the market was going to do, which cost me. But hopefully you guys learn from this mistake and you guys don't make the same mistake. So we're going to go ahead and go on the charts just so you can see what I'm talking about, kind of put what I'm saying in the charts together, and hopefully you learn something from this video. So let's get into it. As you can see, we have Tesla. This is the 5-minute chart. I called these levels out today in the Blueprint trading group. I said calls over 1115, puts under 1104. Now, funny thing is, people in the trading group were able to capitalize on these levels because as I post my levels in the chat, people can trade off of those levels and make money themselves without me having to actually call the play, even though I do call every play I get into. So while they were locked in, I was not locked in, but it's okay. I'm human, I make mistakes. But the best part is about the market is that there's always another day. There will be plenty of more opportunities for me to get my 20K to 30K days, right? So back to the chart. So as you can see, I got these levels because one, it's my pre-market high, pre-market low level. If you don't know what the pre-market is, it's the market before the market. So 9:30 a.m. Eastern time is when people can trade options, right? But if you have shareholding positions, you get to trade during the pre-market. Let's say you trade with Robinhood, then the pre-market starts at 9 a.m. If you trade with like Webull or something like that, pre-market starts a little earlier, but it varies per platform. But as you can see, the orange shaded area is my pre-market time. So this is from 9 a.m. Eastern time, or I'm sorry, this is from 7 a.m. Eastern time all the way until 9:30. And the platform I'm using is TradingView to chart. Now, as you can see, how did I get these levels? Like I said, this pre-market high, pre-market low, but that's not it. As you can see, the day before, we also had some rejections at this level and some bounces at this level. So let's pull the path tool out and let's chop this up a little bit. Let's see what we can get. We had a move up, rejection, bounce, bounce. Then we had a move up, then we had another bounce, just some price action before another rejection, and then the market opened down here. So you can see that we rejected off this level 2 times, 1, 2, and then we bounced off this level 1, 2, 3, 4 times, right? So two rejections, 4 bounces. That's obviously a solid support and resistance level. Also, if you watch my support and resistance level video, you guys will be able to understand what I'm talking about now if you don't already. Just a quick recap of that. We have move up, we have a bounce, 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 bounce. Then we had a rejection, all around the same level. So over 1114, or really 1115, I want calls. Over 1104, I want puts, right? So this is my level for calls. This is my level for puts if we can break out and go on a good run. So when the market opened, I was already in the mindset of the market's going to be choppy. There's not going to be really good price action. I'm not really going to be able to take advantage of any of my plays because I don't think the market's going to look good today, right? As you can see, the market did open relatively choppy. What does choppy mean? Meaning there's no direction up, there's no direction down. It's kind of in the middle. And when it's just trading in the middle like that, it's not a good time to trade because either side of the play, whether you want to run calls or puts, neither of them usually work out. And that's what you got right here. The prices is kind of consolidating. It's not bullish, it's not bearish, it's just there. right? And that's only, as you can see, this is 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. That's 5 candles, right? So we had 5, 10, 15, 20, 25 minutes where the price action was choppy. But here's where I messed up. I took this 25 minutes and let it define the rest of the market day. The market's open 6 hours a day. I took 25 minutes and let that be the deciding factor on whether the day was going to be good or bad. And that's where I messed up. So instead of giving the market a chance to choose a direction, I chose what it was going to look like before it even happened, right? Had I waited, I would have been able to take advantage of a really good move. Check this out. So as you can see, we had some consolidation at open. We had some wicks at the support level, indicating that there's some buying pressure. Had some indecision right here on this candle, and just some choppy price action. Before, on the 30th minute, because this is the 5-minute chart, we had a move up, and then we rejected off of our 1115 level. As you can see, this is a strong level. We had a rejection right here, a rejection right here. Markets open, we rejected right here. After we rejected, we had a move down, and then we broke on this candle. On this, I think this is the 7th candle of the day, we were able to break under our 1104 level, right? But by this time, I had already checked out the stop. I had already checked out. Tesla's not doing nothing today. I'm done. The first 30 minutes were terrible, so the whole day is gonna be terrible. I couldn't have been more wrong, right? So knowing me and knowing, if you watched my previous videos, you know I do not take the first candle after the break, or I do not take the candle that actually broke the level. So this candle, even though it's under our put level, I did not take that. Also, I did not take that because, well, I wouldn't have, because, you know, I obviously didn't take it anyway because I didn't play the stock, even though I should have. But what I would have done is draw another level right here. Now, why did I draw another level at the bottom of these wicks? These wicks indicate buying pressure, right? Anytime you see a long wick under the body of the candle, the body meaning the colorful part. So you see how you have this red square and this red rectangle and this green rectangle. That's the body of the candle. The long line under the body of the candle those are called wicks. And when you have a wick at the bottom, that's indication of heavy buying pressure. And when you see heavy buying pressure at a consistent level, then you can call it a support level. So right here, it wicked once, it wicked twice, didn't really wick right here, wicked a little bit right here. So this level was, for me, I didn't know whether the stock was going to bounce or, assuming I played the stock, I didn't know whether the stock was going to bounce or continue down under that level. So for me, I needed not only this level to be broken, the 1104 level, but now I need the 1099 level to be broken, right? So as you can see, like I said, we had price action, a rejection at 1115, and then a strong move down, another strong move under our first level, and then we had another strong move under our 1099 level, which is another key level for me for my 5-minute chart, because we had these two wicks right here. Now, how I like to trade, I only take the next stock. I only take the next candle. So even though this broke under that level, I'm not taking it until this candle opens up and shows that it's bearish. And then, as you can see, that's exactly what it did. You had bearish candle under that first level, then another bearish candle under the second level. The next candle is going to be my entry point. And then, as you can see, it started to go back up. Now, if you watch my support and resistance video, we talked about, not only did we talk about candles, but we talked about break and retest. This is one of my favorite price action movements to indicate that we have a strong move down or strong move up, depending on what the chart looks like. So as you can see, we had a move down, and then once we broke our 1099 level, remember, we started wicking here. This is now a support level, but our support level became a resistance level. How does that make sense? What does that mean? So as you can see, we had a move down, we broke our level, and then once we broke our level, we retested that level before making a move down. We enter on this candle. This would have been my entry after a strong move down and a break of that support level. And as you can see, it starts to go back up, and then it retests our 1099 level before making a move down. So we're here, we enter, at the moment we're losing money. Above this level is my stop loss, meaning that if it breaks above this level, I will get out the play because it's no longer a play for me. But then, as you can see, it did not break above, it just rejected that level and made a move down. So based on the chart and the price action and my strategy, my entry is around 1095, right? It goes all the way down to as low as 1087. Retest our 1099 level before breaking down even lower, all the way down at its lowest for this little run, 1064. That's a huge move. That's a crazy move. And knowing me, I would have gotten out at the first sign of a retracement, especially in this current market, because I've seen a stock, like Tesla. I've literally seen Tesla go down $40 and go up $60. So you can never be too careful. So I know, knowing me, I would have definitely gotten out on this green bullish candle right here. I don't know where I would have gotten out. Let's call it 1074. Nonetheless, our entry was 1095. Our exit was 1075, right? That's crazy. That's a crazy move I missed out on. And I missed out on it only because I made a decision about what the market was going to do, what the market was going to look like based off these few candles, right? That's as much of it. That's the most time I gave Tesla today, and obviously it was terrible. It was a terrible decision, but you live and learn. This is just another play to chalk up as a missed opportunity. But at least I know now, or I already knew, but I'm refreshed. My mind is refreshed.
Isaac, you're not supposed to do this. You trade, you try to guess what the market, you try to predict what the market was going to do, and it ended up biting you.
So next time you need to make sure that you stick to your levels.
Give the market a chance to open and choose a direction
before you just cut the market off for good.
You feel me?
So just a quick recap. We had our pre-market high, pre-market low. We had the consolidation or just choppy price action to start the day. We had a rejection again off our level before a strong move down. And then after the strong move down, it broke both of our levels, 1104 and 1099. Then we had a strong break. We had a retest, and then we had another strong move down, all the way down at its lowest point to 1064 before my exit for sure 100% would have been around 1075, 1074, right? So that's how I missed out on $20,000 to $30,000, because knowing me, I love to go with the flow. So if the market is bearish, I look for bearish setups, and if I find a good bearish setup, then I would happily load 15, 20K in one play, which definitely would have been the case here, but obviously I wasn't able to do that. And whatever. I'm not, as a trader, you have to understand that you're not going to catch every move. You're going to have times where you're going to have a lot of times where you're like, oh my gosh, I wish I didn't sell, or oh my gosh, I wish I sold and secured profit. Everybody's hindsight is 2020, right? It's so easy to say what you would have and should have done after it's already happened, right? So this isn't anything I'm beating myself up over. Obviously it sucks, but the market will be open another day, and then there will be another opportunity for me to seize an opportunity like this. So that's all I got for this video. I hope you learned something from this video. I hope that this made sense, and if you take anything from this video, it's just my usual thing. Take what the market gives you. Don't be so quick to make money, so eager to make money that you make decisions for the market. If the market hasn't shown you that it's bearish or that it's bullish or that it's going to be choppy, don't you make that decision. Don't you determine that that's what it's going to be, right? So that's all I got for you guys. If you have any questions, feel free to leave it down in the comments below. If you have any requests at all, feel free to leave it in the comments below as well. And I will see you guys in the next video. Don't forget to like and subscribe. Peace out.